This is the Self-Storage Podcast, where we share the knowledge and skills from the industry's leading investors, developers, and operators to help you launch and grow your self-storage business. I'm your host, Scott Meyers, and over the past 16 years, we have acquired, developed, converted, and syndicated over 2 million square feet of self-storage nationwide with the help of my incredible team at selfstorageinvesting.com, who has helped thousands of people achieve greatness in self-storage. Hello, everyone, and welcome back to the Self-Storage Podcast. I am your host, Scott Meyers, and this week's guest is Dr. Ross Stryker. Ross is the founder and CEO of Smart Asset Opportunities, a real estate investment company that syndicates, develops, and acquires various real estate projects nationwide. But prior to investing actively in real estate, Ross ran a private orthodontic practice for 23 years after serving 12 years in the United States Army. Ross is also the author of 3 books, Why Not Financial Freedom, Why Not Smile, and Persistence, Pivots, and Game Changers, Turning Challenges into Opportunities, an Amazon bestseller in multiple categories. Ross has also been a member of our self-storage mastermind for a number of years, and he and I successfully built a Class A temperature-controlled facility and promptly sold it near certificate of occupancy, exceeding our projected returns for our investors by a wide margin. Now, I say we, but Ross was the boots on the ground driving that project to completion. I simply assisted and brought most of the equity. Ross has also been on 2 of our house building mission trips and is also giving back by mentoring his nephews in real estate development now that they are of age to be active in the business. And on this podcast, we discuss how to build a team and the art of execution, which is what Dr. Ross Stryker does so well and why I'm so thankful and excited about sharing his story and how he approaches this industry with all of you. So without further ado, please enjoy my wide-ranging conversation with Dr. Ross Stryker. Dr. Ross Stryker, good to see you again. Welcome to the show.
Scott, thanks for having me on, and it's such a pleasure to be with you. And before I forget, I just want to thank you again for all the help you've given me over the years. And on behalf of everybody you've helped, I want to say thank you because I know you've impacted so many lives, and you're a busy guy, and I know you've been on the road and just got back. I'd say late last night, but it was early this morning. So if Scott looks a little tired on this interview, guys, he's a busy guy. He's on the road a lot. And anyway, congratulations on the newlyweds. I do want to say that. And glad to be with you. And any way I can help your listeners, I'm here to serve you.
Well, Ross, thanks again. I appreciate that. And yes, a little weary. We did get in early this morning for my son's wedding and just had an incredible time. And not back to business, but just thankful that we're in a position that we can take off almost any time we like in this self-storage industry and to be able to do the things that we like and want to do. And there's no real sense of urgency to be able to enjoy things like that and appreciate your sentiments about helping. We are here to serve as well. And I know that you have a big servant's heart and have been on our house building trips as well. So appreciate you and everything that you do for us and our folks and helping in any way that you can because you're always willing to offer and appreciate you.
Hopefully I can share some words of wisdom. I don't have a lot of words of wisdom, but I'd be happy to share anything that I can. Speaking of words of wisdom, I saw something I was reading this week that the Lord's Prayer is 66 words, but the federal government regulations regulating cabbage sales are over 26,000 words. So hopefully I can say in a short amount of words what needs to be said and not 26,000 words what doesn't need to be said. How's that?
Well, since we both are pretty much on the same page and try to stay as far away as possible from anything that the government gets its hands into, and I don't think that that's going to be a problem today, Ross. So
okay,
I appreciate
all right, good.
Well, Ross, I've given everybody a brief bio on your background. And once again, thank you for spending time because you are busy as well. Thank you for spending time on the show as well. So why don't you fill in the gaps and talk a little bit about what you've been doing since the last time that we chatted and got together and what you're focusing on recently.
Okay, well, just real quickly, before I get to what I'm doing right now, recently, my background is as an orthodontist, and I did that for 23 years in private practice. But prior to that, I was in the military for 12 years. And I sold my practice in 2017. And I had already been a passive investor in real estate, investing in other people's opportunities. But as I approached the sale of my practice, I realized I wanted to be more active because I knew I wanted to be of service to others. And that was one way I could do that by becoming more active instead of just writing checks to other people's opportunities. And I wanted to learn more about how things work. And one of the smartest things I did was to become part of your mentoring program, your mastermind, and learned a lot from that. Most dentists are not the greatest business owners. They're not savvy at running a business because the margins are so good there. In most businesses, you've got to be a little better about tightening the ship and doing things better and watching the expenses and so on. Dennis can get away with being a little loose on that. Admittedly, I was that way. So being part of your mentoring program was a big help in kind of tightening things up and learning a lot about how to take care of investors and how to do a syndication. And so very grateful to you for that help. But that's what I'm doing now is syndicating opportunities. Right now, I'm in Topeka, Kansas, working on a project with my nephews that we're doing. And I'm also looking at a couple of future projects right now, one in storage, which will be a ground up development. That's kind of a lane that most people are a little afraid to touch that rail at times because it seems like it's risky. But to me, it's just all about picking which lane you want to travel in. I mean, I get it that storage has quicker ways to cash flow than ground up development. I get that. But it's also got less competition. Most people don't want to do that. Most people would rather look at a value add, an existing facility that can be bought. You can increase the cash flow because of poor management, or you can add facility space, or they want to do a conversion project or whatever. Most people don't want to play in the development lane, and I get that. But for me, it's less competition, and the fact that it's a little harder right now. People are scared about interest rates, are scared about costs of materials and so on, and delays and lease up time and so on. That just makes it harder, which means fewer people are going to want to do that. And to me, that means less competition. I'm only competing against myself. Another area, which I know you'll be like, whoa, it looks like he's reverting back to something, but I do have a real strong place in my heart for what's going on in housing right now. I don't even know if there is such a thing as affordable housing right now. We all talk about, hey, let's help with this affordable housing situation. I don't know if there is affordable housing, even with all the things that are coming out. So I've got a project that I'm starting now, which is not a single family house. It's a development of several single family homes, which will be more on the affordable side of it. But there's also some risks there too. You've got to be careful. We want to take care of God's children, but sometimes people that you get down into the affordable end of the scale, you got to be a little careful about how they take care of homes and so on. You know that from your past experience. So looking very carefully how we're going to manage that and do that. But that's something legacy wise, I feel like I have the means and the ability to put together a team to do that. And that's something I need to do. So anyway, that's kind of what I'm looking at right now, current lanes that I'm looking at and taking new projects on in that area.
Well, Ross, there's a lot to unpack there. And again, I've been looking forward to having you on the show to kind of discuss that, because I don't know that you're necessarily a unicorn. However, it is very rare, as you had mentioned, that people in the medical field, the dental practice, they go into practice because they want to help people and they want to serve, and that is a field that interests them. But when it comes down to the business of it, which ends up being certainly more than 50% of it, you got to run a practice. Somebody has to manage it and run it, guide it, and direct it. And it is rare that we find folks that have as much business savvy and sense as you do, so that you can be the tactician as well as the business owner, even to the place where you realize probably earlier than most that you needed and wanted to do something different at the end of practicing, and that you didn't want to spend the rest of your life with, as you or other folks in the industry that we hang out with, my hands in somebody's mouth for the balance of my career. And so in preparing for that, and as you mentioned, being curious and looking at other investment opportunities, you became a passive investor, and you've done so through, multiple decades now. And as we are approaching another recession, let's discuss a little bit about how you've been opportunistic, and you touched a little bit on your approach to the recession, which is in your development work. When people are running out, that's the time for us investors to run in. But if you could, maybe encapsulate your thoughts on how you have approached recessions in the past with your investing dollars, both actively and passively, and how you're approaching this upcoming or current recession.
I don't have as much experience as you do, Scott. Let's just say that right now. I was very fortunate. I was not in the stock market when 2008 hit. Many of my peers were approaching retirement. The financial advisors that they had made sure that they could practice for several more years to recoup their losses. So how beneficial of them. I'm kidding them, saying that tongue in cheek, obviously. but their careers were lengthened quite a bit. I didn't have to suffer through that. So it wasn't really anything that I was prescient about it. I wasn't involved in real estate investing in 2008. As many people lost everything in that time. So, but I also wasn't heavy in the stock market either. So I didn't lose a lot of money in that either. So as we look at the coming recession, like you say, I think there's a lot of opportunities. I think you do have to be careful, obviously, but we're always careful. I mean, and for me, as far as picking my lane to travel in, just to tighten that up even more, I'm looking at opportunities that are somewhere in between the mom and pop opportunities and the large REIT opportunities. I think that's a lane to look at for me. Secondary, tertiary markets, maybe more in the $7 to $12 million range, somewhere in there. That's just a lane that a lot of people don't want to swim in. It's too big for some people. It's too small for others. And it's just right for me. It's kind of like baby bear's porridge. It works for me. So I don't know if that answers your question, but I will say this. One thing that I do, and I appreciate the comments about me being necessarily a unicorn, but different than most doctors. One thing I think that I learned as an orthodontist was I know how to delegate, I know how to find the right people, and I know how to put a team together. And that's probably my greatest skill. It's not that I'm really that smart. It's that I'm willing to pay for good advice. I was willing to put in the expense of being part of your mastermind, which a lot of people probably look at and go, man, that's a big check to write. Good advice is always worth the money. And being part of your mastermind, even though a lot of people probably catch their breath a little bit when they write the check, that check is worth it, being part of a group, because you can go out and stumble around and wander around in the wilderness for 5 or 10 years, and maybe you'll come out of it and survive. But writing a check and being part of a group and being part of a mastermind group is the quickest way to get the knowledge that you need. And there's protection in the tribe too, as you know. I mean, people that violate the tribe, they're not part of the tribe for very long. So it's good to be part of a tribe. It's good to be part of a mastermind. I think my skill is finding the right people, putting them in the right seat, and just getting out of the way and letting people do what they need to do.
Well, Ross, to coin a phrase that you had stated and mentioned to the group when you were presenting at our mastermind, it was probably a little over a year ago, maybe a year and a half ago. You said you've never hesitated to cut a check for speed in pursuing mentoring or joining a mastermind. What I wanted to touch on that you just discussed next is that for the folks listening out there, Ross and I were involved in a development project together, and we came alongside of Ross and helped him on that, but he executed all of it. And he has built, as he mentioned, an incredible team. And so, Ross, would you spend a little bit of time on that? I feel that you, of probably above everybody else that I've worked with, has been able to execute with speed, truly better than anybody else that we have had either come through our mentoring programs or that I've been a partner with as well. Does that come from the military background? I know a little bit of it is your DNA. You move pretty fast. You're a no-nonsense guy, especially in our meetings. But tell me, is that intentional, or is that just natural, or do you even recognize that you may move faster than some folks, especially when it comes to your team and the speed in which you execute?
I think it's several factors, Scott. First of all, I was having dinner with my youngest nephew a couple nights ago, and we agreed that there's something in the Stryker DNA that we just are all entrepreneurs. We're all business owners. My 2 brothers were engineers, but they owned their own business. They didn't work for other people. They owned their own business. My dad, yes, he was a part-time farmer, but he had a part-time small business. My grandfather, looking back, and, as Steve Jobs said in his famous 2005 Stanford graduation address, you connect the dots looking backward. And as I look backward to my grandpa Stryker, he's probably the one that really started the whole thing. I mean, he kind of took the Stryker family that had moved to Kansas in the late 1800s, and we were probably poor as dirt, and became an entrepreneur back in the early 1900s, and probably was the one that set our family on a path that was a little bit different. But the other part of it is, Scott, my team sometimes looks at me and says, you are kind of like the guy that jumps out of the 40-story building and then looks to see if he's got a parachute on. Sometimes I'm a little more prone to taking action than some people are comfortable with, and that can get you in a little bit of trouble sometimes. But I'm not an aim and never fire guy. I take action. Have I made mistakes? Sure. But I think I've gotten further because I do take action and get things done. And I think probably it is part of my DNA. So anyway.
Well, in working with folks and mentoring them and helping them along, I can point to several examples where, yes, the aim and never firing doesn't get anybody anywhere. But probably the best analogy is in terms of coaching. Talking with a race car driver coach, because as most people know here, I'm a big fan of Formula One and anything racing. And he said, you know what, I'll take the fastest driver out there who comes inches from the wall or wrecks a lot, because I can slow him down a little bit and make him better. But I can't take a race car driver that's a little bit slower than that guy and get him up to speed. So I think from an investing standpoint as well, maybe not jumping out of the 40-story building without the parachute, but I get it. Yeah, absolutely moving fast. And, we're going to break a few things and make a few mistakes. But the folks that operate in that fashion are far better than the ones who overthink or overanalyze or are always looking for somebody else to validate their reason to move forward, because they usually never launch or they just never reach their growth goals as well.
Well, and Scott, it's a persistence thing too. Brick wall is difficult to get through, but if you keep chipping away at the same point, you're going to get there. And it's kind of like Napoleon Hill's 3 feet from gold thing. You stop short of just being there. And it's kind of like the difference between water at 211 degrees. Well, it's just hot water. What's water at 212 degrees? Well, it makes steam and you can run engines off of it. So it's just that little bit of extra energy to get you to that next step. And I am pretty persistent about things. So I will give myself credit there too. I'm not trying to toot my horn, but that is, I will put in the work for sure. So,
And that is another lesson. And we have to go down this road, but we just pulled a plug on a development project that we just got hit with probably anything and everything that could go wrong. And that delicate balance of, have I spent every last dollar that is going towards moving this project forward, but in a smart way? Have I opened every door? And if they have all closed, now it's time to shut down. And so that balance of, am I being persistent, or now am I just being bullheaded and prideful, thinking that now I need to make this thing work, versus being prudent and realizing, okay, all these doors have been shut. Now it is time for me to shut down this opportunity and move on to the next.
Oh, sure. Yeah. I mean, you can't let pride get in the way and make you stupid and spend a bunch of money that you shouldn't. And especially if you're a steward of other people's money, you've got to be especially careful. That's why I would never do anything that I don't have quite a bit of the capital of my own in an opportunity as well before I put investors' money into it. So a lot of those things that are development need a priming of the pump. As you know, with the project we did together, I'd spent quite a bit of my own capital before we came back to investors and raised capital. So I had quite a bit of my own money in that opportunity before we even raised it. So, but yeah, you're right. I mean, at some point, you've got to just say, this isn't working out. That's part of it. Some of them aren't going to work out. That's fine. Yeah. It's not a failure. Let's just move on. So,
right. It doesn't mean you're a failure. It just
right. Yeah. Yeah.
It's time to move on. This project didn't make it.
All right.
Well, Ross, you're very opportunistic, as you mentioned, and you're, because of your curiosity, that has led you to invest in some different areas. And not that real estate is a pretty wide open market, but you've also invested outside of real estate as well. I want to talk more about, not necessarily individually what those investments were, but your approach to investing and keeping an open mind, because most of the books that we read out there and the folks, the gurus you listen to in the podcast, follow one course until success, and continuing down one path, or being a specialist in something. But you've taken a little contrarian approach to that because of your curiosity, wanting to learn, and that has led you to invest in other asset classes and other businesses in general. So maybe talk a little bit higher level about your approach to investing, and is it just, I don't want to say haphazard, is it just out of your curiosity, or how do you know it's something that is a good path, a good investment to go down, if it's something that you haven't invested in the past?
All right. Well, it depends on where I'm at. Season of life I'm in, like we alluded to before we got on to the recording, Scott. And I'll give you an example. This year, I'm going to be hit with some pretty good tax burdens because of projects like the one that we worked on together. So your next investments might be, I'm not saying the tax tail wags the dog, so to speak, but it does influence the dog on which direction the dog is going. But a lot of times I've invested in things just because it looks like fun. And I know that may sound crazy to people, but I'm at a point in life where I can do that. I can invest in ATMs, or I can invest in a venture capital startup company just because I want to learn how that works. And it may have applications to what I'm doing next. I invested in a project in Austin, Texas recently because it's related to the affordable housing industry, and I want to know how that company works because I'm going to glean information from them. I'm not going to say steal because I know that I'm there to steal information from them about what I'm doing. Another venture capital startup in the Phoenix area related to a mastermind that I'm in that has relevance to the affordable housing because of robotic industry and how they're building components to housing. So I'm going to get information from that, hopefully make money, but some of it's just, I want to learn. Most folks that are my age, and when people see this on video, they'll know I've made a few trips around the sun, would probably be looking at, well, you're just going to invest in cash flow things and not worry about that. But I still invest in a lot of things that are equity building, wealth building, and hopefully on the back end in 4 or 5 years have a big payoff with very little to show in between. Very different than most folks that are in my age group. But again, I don't always do that. Sometimes I invest strictly for cash flow, of course, but a lot of times I'm investing in things just because I want to learn how that industry works. I want to learn a little bit more how the operator looked at things, how they set things up in the syndication, how they're rewarding their investors, because I can apply that to what I'm doing. So I hope that makes sense. But
it does. And as we discussed before we get on, Ross, and to hear you state it again, impact investing is what I see you doing right now actively, which means that you recognize, I think we had this conversation at least 2 years ago, call it affordable housing, workforce housing, that we have an issue and it's going to be a greater issue, and it has become that. So for the folks that maybe have their head down doing nothing but self-storage, talk a little bit about that and where you see the challenge that we're in this country right now, as well as you mentioned, to make money at it. That's the greatest way we can make impact if it's profitable. But let's talk about the challenge that we have in this country right now and the opportunity, the way you see it, and why you're so fired up and passionate about it.
All right, well, let's give you a specific example. One of the markets that I'm involved in right now is Huntsville, Alabama. And every market's different about what median household costs are and what sale prices are and so on. And again, whatever numbers I throw out today are not going to be evergreen 6 months from now with the interest rates and so on. And I realize housing prices in many markets have softened, but Huntsville's still a very strong market and a lot of people moving there, a lot of job opportunity. Just a little over 12 months ago, depending upon which area of Huntsville but let's just talk Madison, which is a little bit nicer area northwest of Huntsville. And median household prices there might have been $250 15 months ago, but now they're $350. All right, well, now let's add in that a 30-year fixed went from 2.8 to maybe 6%. What do you think that did to the monthly mortgage payments? About $1,090 to $1,900 and something, all in just the span of 15 months. Now, I know the federal government is telling us that inflation is 9%, but I don't believe that because gas prices have doubled and housing costs in that example, in that market, have almost doubled too. So if you double the two biggest things that people are paying for every month, which is gas and their housing costs, maybe food's the second one after housing, not gas. But anyway, those are two very big expenses for most households. So again, am I going to solve that problem for everybody in that market? No, but I might be able to make a little ripple in the pond because I've got some ideas on how we can do that. Now, part of the problem, too, is municipalities stand in the way of doing things in affordable housing. They all talk a big game about how we want to help with the affordable housing, but their idea of affordable housing is apartment buildings. That's just their idea. That's what it means, because as far as single family homes, when you start talking about lot sizes and setbacks and all the different density things and the codes that it does make it a challenge. But again, it's kind of like the brick wall. You keep chipping away, you find a way to get it done. And we are finding some solutions. It may not be a solution for everybody, and it may not be for the lowest rung on the ladder that we're solving the problem, but at least it might be one rung of the ladder that we can help solve that. So again, I kind of wandered off in a lot of territory there, but it is a big problem. I saw something a few months ago estimating that 70 to 80 million people in this country are housing poor, meaning either they're homeless or their housing expenses are way over what their monthly budget should be. And that's probably outdated information now. That's several months old. We're probably talking well over 100 million people are housing poor now. So.
Mm-hmm. And that is much because that's exactly what that we're looking at. And there are many folks out there that are now shifting towards that and recognizing even people on the passive side, they're looking to invest passively in real estate or self-storage, are looking for companies that are making an impact, whether it be building houses in other parts of the world like we do, or taking some of those proceeds and then investing directly in projects like what you're embarking on right now, Ross. But impactful investing while you're still active then leads to the legacy piece as well. And so, first of all, define what you think that looks like, Ross, in terms of investors that are shifting from more active to passive. How would you define it? And then specifically, what does that mean for you? When you're at the end and you're sitting in your rocking chair and maybe you're just moving a little bit of money around here and there, but you're not out actively launching projects or in the day-to-day with your nephews or whomever else, what is the legacy that Ross Stryker wants to leave behind?
First of all, I do want to say this. Storage is still a great place to invest. And I am looking at my next project, and if for nothing else, it may pay the bills to help me do what I want to do in the affordable housing arena. So it might rob and Peter to pay Paul a little bit to say that I still want to do a storage project and have one envisioned right now that I'm going to be working on. But some of that may be just so I can do some of these other things that I find fun and legacy building. As you know, I don't have children of my own, but I do have two adult nephews that are both engineers, smart kids, and they want to soak this up and learn how to get to their freedom point too. The other part of legacy for me, Scott, is just helping some of my former peers get to their freedom point. And I've played a small part in helping some of those people do that, which frees them up to do things like go on mission trips or like spend more time with their family and do more of the things that they enjoy doing. And I'm happy to say that some of the people coming up behind me are a little smarter than I was, because they are spending that time as they're coming up through the dental industry. They are spending time with their family more and not so work focused like so many people my age were as we got out of school and did all the things we were supposed to do and worked hard. And then we kind of look back at age late 50s and go, kind of what happened? Where am I right now? But as far as when will I be sitting in my rocking chair and just doing passive investments, it's going to be a while yet, because I still enjoy being active and I still enjoy using my brain and I still enjoy finding things and making things work and helping people get to their freedom point. So that's not going to be for a while, I can assure you. But I'm trying to choose my battles a little more carefully. Just wrapping up a sale of a property today, hopefully. And some of them are just a little more challenging than others, and I'll be glad to put a bow on that one. Or some of you've had some like that yourself, where you're very glad to see the money slide across the table and say, I'm done with that one, and I may not do one exactly like that again. But anyway, it's all good. We all learn something from all of them. So.
Well, Ross, I appreciate once again the fact that you are so impact-minded while you're active, and the legacy that you're going to leave behind is still being developed. And as we have mentioned before and said several times, those of us that have the ability to contribute, I think there's an expectation. We have an obligation to do that. That's what we were put on this earth for. And there's nothing that we need to retire. Retirement is not in the Bible. We made that up. And I think many times culture has almost painted the path for us, where we feel that somewhere around our 60s or so that we're supposed to just kind of hang it up and sit back and drink coffee and just count our money or watch it dwindle and hope that it lasts until we last. But as long as there's air in my lungs, I'm going to continue to contribute in some way, and it's just going to look different and just slowing down. And I guess that's what all of us here on this podcast in the greater storage nation, that's what we're here for, is to not only continue to execute, but also to contribute and give back. And hopefully this interview with Ross has allowed you to begin to maybe sit back and take a look at that, if you haven't before, about the impact that you're making and the legacy that you'll leave behind. So Ross, with that, as we transition into the end of our time together, what is it that you would like to leave with our folks here as they are heading into either this next recession, or for those that are out there that are later on in their investing career that may be thinking about this transition, whatever that looks like, from active to passive to legacy? What type of words of wisdom would you have for them?
Well, first of all, as someone who's made numerous trips around the sun, as I alluded to earlier, my focus is a little more on health-related things too. So as far as reading materials, I've been diving pretty deep into Tony Robbins' latest book, Life Force. One of my mastermind groups had a couple of the doctors come in from the authors of that book, and it was very interesting to listen to them. And health-related things are kind of important to me right now, and I'm taking them. I've always taken it serious. I always had good habits, not always perfect, but I think I saw a quote from Anne Lamott recently about everything seems to work better if you unplug it for a minute, including ourselves. And so I do try to unplug. Been more of a gym rat over the years, but now I find myself, on the advice of a life coach that I have, spending more time outside hiking and nature and just enjoying God's green abundance and just looking around and enjoying the sun. And I know that sounds pretty simple, but sometimes just unplugging, literally unplugging and having the phone off and being away from the computers. And I try to make it a point that a half an hour or so before bed every night, I have all electronics off. If I'm going to be doing something, it's going to be heads down in an actual book with pages like we used to have, and not the electronics and the phone and everything else like that. So I don't know if that advice is something you were alluding to, but another book that I just recently read by Tom Wheelwright. Sometimes his books can be a little complex, but Win Wealth Strategies, very simply written book. But man, there's some real gems in that book. And then a book that I'm just now reading is Who Ate Lunch with Abraham, which details the appearances of Jesus in the Old Testament. And I never really read the Old Testament, but now I got to go back and read it, because reading that book, I'm like, okay, there's a lot in the Old Testament it's fun to read the New Testament, but not always. Sometimes we're reminded of our failings when we read it, but the Old Testament can seem a little dry and outdated and maybe not relevant. But when you're reading this book, I'm like, there's a lot there that I need to go back and revisit. So anyway, didn't mean to get off on a tangent there, but I just want to let you know some of the readings I'm doing right now. So
I appreciate that. And yes, the Old Testament is what made Jesus relevant. And so it is important to go back and look to see. And yes, Mr. Wheelhouse is an incredible author. I have not yet read. It has been ordered. His new book, it came at the recommendation of somebody else. And I have not ordered Life Force yet from Tony Robbins. I usually gobble up everything that he has. I appreciate that reminder as well, Ross.
That's a 600 some page book. So it is a work to get through it, but it is worth it. There is a ton of great information in there. So
no stranger to Tony Robbins, and his lengthy books. His one on money has been incredible, and that has been an incredible resource for myself, but also walking my kids through that so that they truly understand how money works. And so I'll just put a plug in for that one for him as well. Well, Ross, once again, it is an absolute pleasure to not only catch up, to spend time with you, but then also to share your wisdom and your approach to life and to business with Storage Nation out here as well. So I'm looking forward to the next time when you and I are in the same room together, and perhaps maybe I can coax you and your staff or whomever to come on another house build in Ensenada with us. It's just not the same without Dr. Ross Stryker.
All right. Well, I love that, Scott. I love mission trips, as you know, and I've been on others other than yours, but yours are always great. So thank you.
Well, I appreciate that, Ross. Well, once again, any way that, or what is the best place for folks to reach out and contact, if you would like folks to get in contact with you to catch up on what you're doing?
Yeah, I'm a pretty simple guy, and I don't care to give out it's fine to give my cell phone number, so I'm just going to put it out there. It's 417-664-0880, and I may not get back to you right away, but I'm pretty good about getting back to people within 24 hours when they call. So if anybody wants to reach me, I'd say text or call me. That's the best. So
fantastic. Well, Ross, once again, thanks so much for your time today. Great spending time with you, and I look forward to seeing you again very soon. Take care.
All right. Thanks, Scott.
Hey gang, wait, 3 things before you leave. First, don't forget to subscribe to the Self Storage Podcast and turn on your notifications so you never miss another episode. And while you're there, please leave us a 5-star review if you like the show. Second, be sure to share your favorite episodes and more via Instagram, and don't forget to tag us. And lastly, head to the links in the show description and hit the follow and subscribe button on Twitter and Facebook to get a front row seat as we grow and scale our business and bring you along with us. Take care.